When you own your own business, you own every decision. Now own the card that rewards you for it. Chase Sapphire Reserve for Business is a painful card that elevates your travel experience and offers premium benefits that can take your business to the next level. Sapphire Reserve for Business offers 8x points on all purchases through Chase Travel, 3x points on social media and search engine advertising, airport lounge access, and more. With over $2,500 in annual value, it's the card that gives back all you put in. Learn more at chase.com/reserve business. Chase for Business. Make more of what's yours. Account subject to credit approval. Restrictions and limitations apply. Cards are issued by JPMorgan Chase Bank, N.A., member FDIC.
A great presentation can be the difference between success and failure. The difference between a good presentation and a great one? That's Canva. Canva brings your ideas together in one place with one powerful app. Use AI to move faster. Collaborate easily because great things happen when people create together. No wonder 95% of Fortune 500 companies use it. Canva lets you bring your big ideas to life as fast as you can think of them. Put imagination to work at canva.com.
Did my card go through?
Oh no.
Your small business depends on its internet, so switch to Verizon Business. And you can get LTE business internet starting at $39 a month when paired with select business mobile plans. That's unlimited data for unlimited business.
There we go.
Get the internet you need at the price you want. Verizon Business. Starting price for LTE business internet, 25 megabits per second unlimited data plan with select Verizon Business smartphone plan savings. Terms apply.
Bloomberg Audio Studios. Podcasts, radio, news.
This is a breaking news update from Bloomberg. Instant reaction and analysis from our 3,000 journalists and analysts around the world.
It is Bloomberg Businessweek Daily. That's Carol Masser. I'm Tim Stenovec. I'm watching shares of Amazon in the after hours, up 8.5% right now. The company reported net sales for the third quarter that beat the average analyst estimates. We're talking about $180.17 billion. That's up 13% year over year. The estimate was for $177.82 billion. AWS coming in. Net sales, excluding FX, up 20% versus 19% year over year. Estimate was for 17.9%. As far as that forecast looks, sees net sales of $206 billion to $213 billion. The estimate was for $208 billion. So kind of on the high, like,
some
higher
room for
side of that.
outperformance.
Yeah. Operating income for the fourth quarter, the company sees that at $21 billion to $26 billion. The estimate for $23.78 billion.
We're going to get some analysis on Amazon, but just want to mention Netflix soaring all of a sudden, up 3.2% here in the aftermarket. This as the company announces a 10-for-1 stock split. Keep in mind, this stock, one share costs $1,089. So we're talking about now it's going to be much more accessible to investors, right? It's going to go down to about...
I don't think so.
At $100 a share?
No, you can buy shares, you can buy pieces of stock.
You don't believe that?
I don't.
Fractional
I think
ownership?
back in the day, back in the day, it made a big difference. But now that all these retail brokerages offer...
You want to take this outside?
No, I mean, whenever I say this, people get in touch with me online and they talk about options and like how important it is for that. But
yeah,
it's always weird when you do see something that's not fundamental actually moving the stock price.
All right, good stuff. All right, anyway, but it is moving it. Hey, let's get back to Amazon because that stock is soaring in the aftermarket. Poonam Goyal is Bloomberg Intelligence Senior Analyst for E-commerce and Athleisure. She joins us from the Bloomberg Intelligence Princeton Bureau. Let's go to you. God, Poonam, this looks like a really strong report on a lot of metrics.
It definitely is. I mean, they hit it out of the park. Sales were very good across the board, across all business segments, AWS, online, advertising, even physical stores. So from a top line perspective, very, very encouraging results. In fact, AWS was probably the bright spot here. 20% gains. We haven't seen that in a while. On the margin side, I think AWS did really well. But then when it came to North America margins, they were weaker than we expected. So it's the only one area that I saw some skepticism. And I think that's largely due to their ability to want to maintain low prices to make sure the consumer keeps coming back and investing in its fulfillment.
So you think that margins took a hit because Amazon is keeping prices low. Why?
I mean, they want to drive market share gains, right? So if you think about what's happening in retail this year, tariffs have clearly added to costs, and many retailers have decided to offset those costs through efficiencies to try to keep and hold prices steady or raise them selectively. So that could be part of the pressure. And then also, Amazon has stepped up its game on shipping, where it was the leader and it still is the leader, but they're continuing to invest there to get items to you faster, same day, etc.
Yeah, they still do it, right? They're definitely completing on that one. Hey, Ed Ludlow, come on into our conversation, co-host of Bloomberg, of B-Tech on Bloomberg Television, watching these numbers. I mean, investors are sending shares of Amazon much higher here in the aftermarket, stock up about 9%.
That the cloud computing division accounts for the majority of operating income, right? And this return to growth year on year of above 20% for the first time since 2022, it's absolutely timely. I think Google gave us a lot of evidence that GCP, their cloud offering, has a lot of momentum at the moment. But this is a bit of a barnstormer from Amazon to say, actually, on every metric that we track, AWS is doing really well. One of the headlines that you spotted, really excellent, the appreciation in their investment on Anthropic, that had a non-operating income impact to the bottom line, right? But also they're talking a pretty fierce game about their custom training chip, Trainium 2, and calling it a multi-billion-dollar business. And what we've seen in the past is when Amazon hasn't necessarily put a specific dollar figure on something, but said this AI thing is in the billions of dollars, the market has given them a lot of credit for giving us at least like a little bit more detail there.
Ed, where does the Trainium 2 model fit in?
Well, this is why I bring Google up. When we broke the story that Anthropic had done a deal with Google for use of 1 million TPUs, Google's custom AI card or accelerator, it was a bit of a black eye for Amazon, because Amazon is also a major investor in Anthropic, and Amazon and Anthropic have this large project called Project Rainier, a data center in Indiana. What they're saying is that this is a multi-billion-dollar run rate business, the offering their in-house chip to third-party customers. We don't know any more than that, but it does indicate that both for Anthropic and for other customers outside of Anthropic, that it's a viable business. They've invested a lot of money on custom silicon, and at least on the one headline we have on that, it's paying dividends, so to speak.
Hey, speaking of dividends and paying dividends, and Poonam, I want to go back to you on the retail side of this. I mean, we know that Andy Jassy, the CEO of Amazon, has really been working on improving profitability of that business. Automation, we've had their key head of robotics
Ty Brady
talking about what Amazon continues to do at that company in terms of automation and robotics. So what else can you give us in terms of color on the retail side of the business, which is something that so many of us, right, identify very clearly with when it comes to Amazon?
Yeah, I think, look, they're making all the right investments to improve profitability in the longer term. Amazon's retail business is finally break even to profitable. It took a long time to get here. And I think automation will be the next leg of growth to drive that further. But as I mentioned, earlier, AWS is driving their EBIT margins. So AWS can compensate these investments to a certain extent, and so can advertising, because the margins here are just so much higher than they'll ever be able to get in the retail business.
Ooh, how is the advertising business doing, Poonam?
It's doing really well. It grew 22% in constant currency in the quarter, so right where we expected. And I think, that's a high profit business. It's about 75 to 80% profit margins by our estimates. And that's flowing right to the bottom line. We see it going to $100 billion. So there's a lot of improvement that they can build in advertising and really drive that business higher from here.
Where is that coming from? Is that coming from interstitials placed in Amazon Prime Video, which I think, caught a lot of people off guard when they started doing that? Was it last year, maybe? Or is it coming from like products that are paid for placement?
I think it's a combination of both. You're absolutely right. These ads are driving incremental revenue. But if you think about the base of this revenue base, it's still coming from product advertisements. The ads do help, and they will become a larger driver as the ad business grows in size. But the core of it is still product advertisement.
Hey, Poonam, before we let you go, what's kind of top of mind for you in the areas that you cover with Amazon that you would be asking on the earnings call?
On the retail side, it's really about holiday and how that's going. The October Prime Day deals that they had, how that's going, and how the customer is responding. We think the customer is still holding up well. Are they seeing the same thing? And how do they see holiday shaping out to be? We're entering holiday.
All right. Love it. Love it. Looking out for Poonam's research, too, that will hit the Bloomberg. Poonam Goyal is Bloomberg Intelligence Senior Analyst for e-commerce and athleisure. We want to go back to the co-host of BTech on Bloomberg TV every day, 11 a.m. to noon on Bloomberg Television. Ed Ludlow still with us. Ed, as you continue to pour over that release, what else is catching your attention?
Yeah, I mean, Poonam gave us the story with Amazon.com, right? Most of the audience are going to be more familiar with the e-commerce business than they are with the cloud computing business. They are number one in cloud computing. And as Poonam put it so succinctly, the profit is compensated for the less profitable e-commerce side through cloud. But Andy Jassy's really focused on retail being more profitable. Tim is absolutely right that you look at advertising and the role that that's played there, and it has been improved. I would also just note that in the quarter, Amazon's numbers reflect almost $2 billion in severance costs. That's the other story of Amazon right now,
Ed,
getting rid of the bloat.
That was the previous quarter, right? Not the current quarter?
Previous quarter,
exactly.
Right?
So is the current quarter going to take a hit right now, or is it going to be the upcoming quarter? It's always tough with this stuff because we don't know how these employment agreements work.
Yeah, but the third quarter operating income was $21.7 billion, almost $22 billion without charges when you strip the charges out. And so, you know, this is a profitable business overall because of cloud. It's a funny thing to say, but what's a couple of billion, you know, to right-size the company? And that is the thing here. Amazon has been inconsistent on this point. At one time, Andy Jassy said that right-sizing the company and eliminating roles was because of the advent of AI. But the communication this past week when they cut 14,000 corporate roles it was more about bloat and middle management, right-sizing areas and simplifying the management structure more than anything. So it's hard to know which of those two stories is the predominant or prevailing one here. But yeah, for Amazon, like it's a one-time charge that, so what?
All right, we want to bring into the conversation to Eric Clark, Chief Investment Officer at Accuvest, Global Advisors and Portfolio Manager for the Alpha Brands Logo ETF, which has Amazon and Apple and Alphabet and Microsoft and Netflix in its holdings. Ed Ludlow is going to stay with us. He's, of course, co-host of BTech on BTV. Eric, come on in on Amazon. You like this?
I love it. I mean, I think the market loves it too. How are you guys? I think the setup into the quarter was pretty attractive because people were nervous about AWS and losing market share. So the stock sold off into the print, and then you get some reality that Amazon is still doing Amazon.
Well, how do you read into this report in the context of the layoffs that we learned about earlier this week? Did Amazon need to do those layoffs? Do you see it as a directional shift for the company? Obviously, they were doing pretty well with this same headcount.
I mean, you're going to hear more and more of this, and I don't love that as a consumer investor, but the reality is when you're implementing AI through your business and you're obviously serving other companies doing the same thing, right sizing of your headcount is a big part of the story. And so with robots in warehouses, plus all the typical right sizing, I mean, it's a very large company, a very large employer. So I think we're going to have to hear about that across most companies, certainly deploying AI because they're getting a lot of efficiencies and might not need the same kind of people.
Hey, Ed, I know you're doing double duty for us and for our TV team, but, I'm just thinking about all these names, these hyperscalers, these big tech that have been reporting. As Anurag Rana said, they're not apples to apples, even though we sometimes,
we're getting Apple in 7 minutes.
We pull them together, and Ed's going to be back, too, to talk Apple with us. But how are you thinking against kind of the big cap tech names?
Really smart question.
How this fits in.
So what they all have in common is capital expenditures. So, okay, on the one hand, they all have capital expenditures. It's what they then are able to say on the other that they've been inconsistent. Meta didn't say anything about growth related to AI, and the stock fell precipitously. I go back to the Trainium 2 headline from AWS, it being a multi-billion-dollar business, their commitment to invest in infrastructure, but also giving us a number for what's come online. The kind of fighting talk from Andy Jassy on the AWS growth and its ties to AI specifically. Investors seem to be rewarding any more little bits of information that you can get that shows something coming out of the investment that's happened in prior quarters. And so while they all have CapEx in common, the story they have to tell about literal top line growth as it relates to AI has been very different. And Amazon has something to say here, clearly.
All right, Ed, we know you're going to probably head over to the TV side, but you're going to come back with us a little bit later on when Apple reports in just a few minutes. Our Ed Ludlow, of course, co-host of BTech on BTV.
For enterprise organizations, managing all your food needs is a tall order. But with EasyCater, you get a single workplace food vendor with the tools and resources to make it easy, giving teams across your organization an easy way to order from a huge variety of restaurants, all on one platform. All while consolidating your corporate food spend so you can control costs, streamline billing and payment, and simplify reporting. EasyCater, your business tool for food. To learn more, visit easycater.com/podcast. How can you grow your business from idea to industry leader? Bring your vision to life with smart business buying tools and technology from Amazon Business. From fast, free shipping to in-depth buying insights and automated purchase approvals, they deliver everything you need to achieve your goals. It's not easy to stand out from the crowd. Simplify how you stock up to get ahead. Go to amazonbusiness.com for support.
Did my card go through?
Oh no.
Your small business depends on its internet. So switch to Verizon Business. And you could get LTE business internet starting at $39 a month when paired with select business mobile plans. That's unlimited data for unlimited business.
There we go.
Get the internet you need at the price you want. Verizon Business. Starting price for LTE business internet, 25 megabits per second unlimited data plan with select Verizon Business smartphone plan savings. Terms apply.